Decentralized finance is a term that is used to describe the new way of doing financial transactions without relying on traditional intermediaries like banks. Instead, decentralized finance uses blockchain technology to create platforms and applications that enable peer-to-peer transactions. So today, our conversation is about blockchain technology. What is cryptos? What are bitcoins? How do they help us in our day-to-day lives? And I am joined by a man who has specialized in crypto investing. He will tell us even how we can do it to achieve what he has achieved. Thank you so much, Tony, for having us here today.
So thank you, Natasha, for making our time to have this particular discussion and your team. So my name is Tony Mboro, and I'm a cryptocurrency investor and an entrepreneur in so many diverse fields, including real estate and specifically in regards to what you're discussing today, of course, I'm a digital entrepreneur. I'm in the crypto space, online, fintech, blockchain, everything. So I'm looking forward to having this particular discussion.
Maybe you can tell us, how do cryptocurrencies work and what makes them different from traditional currencies?
So if you go back to the history of how money works, money ideally has been evolving over time. And from way back when our forefathers used to use barter trade as a medium of or a tool of trade in the marketplace, these currencies or medium or transactional tokens kept evolving. So we moved from that to gold to the banking system coming. So we created fiat currencies. Then we saw Visa, MasterCards. The internet came. We saw the likes of Western Union and PayPal's in the West. Kenya, we have a very great innovation, M-Pesa. So, and then now cryptocurrencies. So when you talk about cryptos, in the easiest layman's language, I can simply say it's the latest version of money. And what makes it different from all these other currencies is simply its nature of being limited in supply and being a decentralized. What it comes to solve ideally is the issue of governance and non-interference in how we do trade and finance in the marketplace. So it's just a decentralized ecosystem where the power of these monies, the cryptocurrencies, in my view, belongs to the people, not the central governing authority, which is the CBK and governments.
Capacity as a crypto investor, you have been able to invest in the same. So maybe you can tell us what is the concept of blockchain technology and its role in the cryptocurrencies.
Blockchain is simply a network. It's a technology that is meant to keep data in a distributed manner instead of how we've always had central distribution points of data. Now we are like, how about we store data in multiple chains that are interconnected, and this way we are removing the monotony or the manipulation of a few individuals in an ecosystem. So blockchain is a technology. Look at it, I would like to use the example of M-Pesa and Safaricom, Airtel Money and Airtel as a network, T-Cash and Telcom. So Safaricom, Airtel, Telcom are the networks that enable M-Pesa, Airtel Money, T-Cash as transactional tokens to exist. So when you talk about cryptocurrencies like Bitcoin, Bitcoin is the transactional token, then blockchain is the network that enables these cryptocurrencies to operate. And the only role of cryptocurrencies, by the way, was to decentralize trade and finance in the marketplace, as I said. So what happens is these currencies, unlike the traditional ways, the printer or the producer of these currencies is not now the few individuals who are in control, is people that create the terms and conditions way beforehand. So the consumers or the users of this currency and technology are able to see beforehand the dynamics, the tokenomics of this particular currency. You know, how many are they, how many will be produced, how many in supply. So, and now based on what we know in economics, basic economics, nothing has intrinsic value. Value is brought about by demand and supply. So if you can know beforehand what the supply of a particular currency is, then we establish the demand, we can establish a pricing point. But for the fiat currencies, what happens? Nobody knows. If I ask you, Natasha, how many 1,000 Kenya shillings are in circulation? 1,000 notes. You don't know. How many $100 bills are out there in the circulation? You don't know. But I know how many Bitcoins are out there in circulation. I know the adoption, so I know the more it becomes popular, then it grows in value. Full stop.
What are some of the practical uses of cryptos in everyday life?
Matter of fact, crypto is a transactional token. You know, most of the time, what happens is I would want to demystify a perception or myth where people, when you hear about cryptocurrencies or you hear about Bitcoin, the first thing that comes to somebody's mind is you're looking at it as a trading asset or something, like a stock share or something. No, it is a token that has utility. It's just a transactional token. If you went into this world of cryptos and fully earned your living through Bitcoin, that you don't need to buy it. You know, where people feel the pinch is when you relating this thing with the dollar. You know, when you're saying, let me go buy, how much is Bitcoin today? So you're buying it using your own local currency or using the dollar, and then you're going to spend it. But if you earned it as a Bitcoin, then you're like, when you're spending it and you're told whatever you're buying is worth X amount of Bitcoin, half a Bitcoin, quarter Bitcoin, one Bitcoin, then you wouldn't ever be interested in how much it is worth against, I don't know, you wouldn't be interested in that price volatility. It's kind of like the gold. When gold existed, I think they went hand in hand with the fiat currency world when it came around. So when you have gold and you're earning in gold and you're able to keep your gold and buy the things in the marketplace using, I don't know how many ounces of gold, you don't ask how much, you don't know how much the gold is worth because you didn't buy it using dollars. You only earned the gold and spent the gold. So when it is exchanged against the traditional world, it becomes tricky. And so Bitcoin for me is a transactional token. It can be used to do anything. Myself personally, I think 6 years ago it's on YouTube. I paid my dowry using Bitcoin, so you can buy stuff, buy houses. When you go to Dubai, I've been there a couple of times and I bought properties using Bitcoins. It can be used to buy anything. You can do transactions using Bitcoin. So the more people understand how these tokens operate, then the easier it is for them to understand how it works.
How do people mine cryptocurrencies and what does this process involve?
Good question. Mining refers to, like for the case of Bitcoin. Now, Bitcoin was the first cryptocurrency to be innovated, to be created by a guy called Satoshi Nakamoto. To date, we don't know whether that's a pseudonym because we never met Satoshi. But what he did, he sat down and said, why don't we have money where the money belongs to the people, not the government? And then created what we call now Bitcoin. And in Bitcoin, if you go read the Bitcoin white paper, which is basically a 9-page document, it's on Google. That particular document outlines how this particular currency was supposed to operate. So we can basically call it a contract because it's a set of rules of how this currency was built to operate. Now, Satoshi did not just think about it and put it on a white paper. He went ahead to encrypt the contents of the white paper, then deploy it on this network called the blockchain for the model to run autonomously. So it became a smart contract. So in this 9-page document, this is how the protocol was written. That there will only be 21 million Bitcoins that are going to be brought into the market in a period of 133 years. We are only 15 years in, so we still have 16, 17 years to go. And what happens is the protocol was written in a way that every 10 minutes, transactions that have happened in the network are going to be validated, are going to be approved and printed on this one big ledger called the blockchain. So this every 10 minutes, the people who verify transactions in the Bitcoin network are called miners, or the process of verifying transactions in the Bitcoin network is called Bitcoin mining. And what they get in return, the reward, is new currencies, tokens coming into the market. So that is how tokens are dished out. So the people who verify transactions, the reward for those blocks is getting new tokens. So that is what we call Bitcoin mining. Yeah.
Now, what are some of the potential risks that are associated with decentralized finance platforms?
I was saying, when people come into the crypto space, unless you really want to be an investor or a trader in the space, then the average person has no business in trying to accumulate these assets for profit because it's a very volatile market. And the problem I'm seeing is that everybody looks at the crypto space as a trading platform, like you look at stocks and shares and forex and all that. So I say these are currencies that have utility and you can use them as transactional tokens. But if in case you decide to invest or hold these particular currencies, in my view, they're very predictable assets because in the last 15 years, the market has had a similar trend where there is always a 4-year cycle where the market is going through what we call consolidation. After consolidation, we do halving. Like right now as we speak, in the next couple of months in April, Bitcoin is halving. And then we are going to start an organic trend of a bull run that is going to climax next year, the year after halving. And then after that, we usually have a recession. Then we do again consolidation, halving, bull, recession. So in my view, if you decide to tap into this market, then it is only wise that you understand the fundamentals of how the space operates and try to seek professional guidance in stepping into the space because it's a very volatile market. The same way you would want to make very quick money is the same way you would lose your money very fast.
We have talked about the government. So is the government really involved in providing a clear guiding framework on the uses and regulations of using these cryptos?
So right now, governments, including the Kenyan government, I've seen a proposed bill they're trying to regulate, but it's ideally understand that cryptocurrencies, then the ecosystem itself was meant to challenge the mainstream financial ecosystem that used to exist before. So they're not meant to be regulated and they're not meant to be governed by government and CBK. All the same, we do have centralized, understand this is decentralized finance, but we still have centralized platforms that points where these cryptos interact with fiat world, the centralized exchanges like Binance. You've heard of exchanges like Binance and all other trading platforms. They can be able to do KYC and track how monies are flowing around, and they're just trying to create a framework and see whether, because it's very hard to track cryptocurrencies. Understand, crypto is encrypted currency, anonymous money. It has no name. It has every transaction is hashed and coded and put in one big ledger and doesn't bear your name. So how are you going to track these transactions and know where they're coming from and where they are going to? And they are borderless. It's like a global digital currency that is just anonymous. So right now they are trying to create for the 15 years in, and still the first worlds are still trying to create frameworks of working with these or transacting for the trying to make, generally what the government is doing is trying to create a safe environment to try safeguard the average mwananchi out there as they decide to trade with these cryptocurrencies. It looks like they are going into a safe space, but ideally the sole purpose of creating this economy was to give the same people freedom from that kind of control. But currently we really don't have, I can confidently say cryptocurrencies are not illegal, but they are not regulated.
And so what are the implications of the government not regulating these cryptos?
Implications will be, number one, even taxing this particular asset class. It's not even legally recognized as an asset. So it's like a dark world, a vague world that just exists. And there are people that are making a livelihood out of it, but they are not in the mainstream grid of how the accounting and accountability part where even government can get taxes and all those kind of things from them. And then of course it can be easily be used for the wrong purposes. But just like traditional finance, you can't stop a person who has whatever intention to do what they need to do. You can't stop them from doing it. So for me, crypto, yes, has its own level of freedom, its next level democracy, especially for the African market, because Africa is really suffering from, for any person who's done business on a big scale that needs to connect with the rest of African countries and the rest of the world. The mediums we have, the likes of PayPal and all that, are very limiting. And if you're seated here and you need to transact with somebody, or you're making, or you're doing your online jobs, and maybe your employer is out there in whichever country, it's very easy to get your salaries or to just interact with those worlds very easily, seamlessly with cryptocurrency. So it has its pros and cons. In my view, it's a very powerful technology in future that can give the average person the ultimate freedom we've always been looking for.
How can cryptocurrencies ensure user privacy and security in an increasingly digital platform?
Default blockchain is the most secure technology we've seen for the longest time, because for these cases of hacking, for you to hack data, you have to attack the information from the source, where the server is. Now, with blockchain, we don't have servers. We have distributed servers that are interconnected. And for a consensus to be achieved in whichever ecosystem, a 50 plus 1 vote has to be achieved. And mind you, all this network, all these computers that are interlinked, these are people who don't know each other. So to alter data in a network becomes very difficult. Actually, in the last 15 years, I don't think we've had a case of any decentralized platform being hacked. What is usually hacked and what has been breached previously is centralized ecosystems that tend to interact with these decentralized platforms. Like centralized exchanges can be hacked, and that is why people need to educate themselves on security measures of, if you really must come into this space, how to safeguard your assets, and learn about those centralized and decentralized exchanges. If it's about wallets, centralized, decentralized, how you can store your crypto offline in physical hardware ledgers and all that. So it is just a matter of people educating themselves to understand, because definitely if you come as an amateur, you may giving instructions, because smart contracts work in very funny and smart ways. It is very easy for a newbie, an average person to just step into the space, because they don't understand how it works. You easily lose your crypto, and these transactions are irreversible. So unless you give authority to third parties, it is very hard. In itself, it's encrypted language, it's encrypted money. Does not bear your name, so there is privacy. If you teach yourself how to stay safe in this space, then it is the safest mode of transaction you can ever have in the marketplace.
Cryptocurrencies really achieve a level of stability and become a reliable store of value.
If we are to use, for instance, Bitcoin, because Bitcoin, we can at least say it's fully decentralized in that we know its supply, we know how much is out there in circulation, we know how often it comes, how long it's gonna take, so nobody interferes with the process. And it follows the full guidelines, or the reason why these currencies were to be created, to be decentralized, not to have control. Even the creator doesn't have control. I'm not sure I can say the same about all these other currencies, because there are so many that are coming up, and most of them now are created by people who are trying to, yes, create the same solution, but they tend to be in control. So stability means that if we use like Bitcoin blockchain as a base value, just like we used sometimes back. Let me give you a story how money, and when money was evolving, how we landed into fiat currency world. Before 1971, after we had come from that gold and silver standard of transacting in the marketplace, gold became bulky and was only used as a store of value, but could not be used as breakable units of trade. You can buy a cup of tea with a bar of gold or an ounce of gold. It becomes difficult. So they said, hey, why don't we come up with a mechanism where you store the gold in the, somewhere in a reserve, national treasury, and what they do, we are going to print or create man-made transactional tokens that are going to be used to do trade. But because these are man-made, then we can only refer to the gold to hold, to use it as a store of value, to use it in relation to these currencies to control how much we make. You get what I'm saying? So they started making Madururu Mateni, and then the paper as we know. Now this paper, because it's printed by government was only allowed to print as much as they had reserve in the national treasury, which was a brilliant idea, because it controls how much paper is printed and how much coins are made. But in 1971, the rules changed. From that moment on, the president by then in the US was Richard Nixon, broke the marriage between the gold standard and these fiat currencies. And from that moment on, every government has been printing these fiat currencies however they deem fit. So when they sell you this model, when they're telling you go to school, work hard, get a good grade, and find a good job to work for the government or corporation for that 5 or 40 years, as you save your money and you're going to get your money back after retirement, there's a question I always ask my mom. My mom was a high school teacher and was employed back in the 80s by the government, retired in 2019. So I asked mom, the 1,000 cash shillings you gave the government in 1980 to keep for you at NSSF, what would 1,000 cash shillings do in 1980? A lot. 2020, you get your pension back. What can you do with 1,000 cash shillings? Because those guys are printing the money faster than you're saving it, causing inflation. But if you had to go back in time and use gold as a standard, gold has never lost value from way back. And for me, Bitcoin is digital gold. So when people understand that, if you can go back now, because money, the same fiat currency has become cashless. Now when you talk about M-Pesas and all these other currencies, if they can be used in relation, tied to an asset that is kept somewhere like Bitcoin, which you know cannot lose value, then we are going to have a very stable economy that grows. But as long as the kind of stability people are looking at with crypto, I think the market you believe in is more volatile and unreliable, is losing. I don't know. There's no reason as to why I'll be working so hard to store or save an asset that just keeps losing value every day. And over so many years, it looks like I'm making one step forward and how many steps back? 2. Okay, you said it, not myself.
How can cryptocurrencies bridge the gap between the unbanked population and financial services?
Market is ideally why the illiterate class is what? Yeah, so crypto I don't think is for the amateurs. It's for people that understand technology and can use smartphones and can be able to understand these complex languages. So if they're unbanked, I don't think crypto would be the ideal medium of bridging that gap between the unbanked and they are simpler tools. M-Pesa is way easier than using cryptocurrencies. So one way or another, I don't think that is the best way to bank the unbanked.
And sort of my final question, the last one, what has your experience been as you invested in this crypto world?
It's awesome. My experience has been the best. Has been the best. Okay, well, I accidentally stumbled upon this space of cryptocurrencies because how it began for me, I've always been a success addict, and I've always been a student of trying to understand how the world works in regards to creating generational wealth. And very early on, I think in 2014 is the first time I stumbled upon an 11 minutes clip on Facebook. And this was a clip by a white guy. He's called Anthony Poyle, who was in the US in Arizona, Scottsdale. And this guy, what he was doing in this 11 minutes clip, he was showing you where he came from growing up in a single room, in a very dysfunctional childhood, the kind of adversity you would not imagine in the US with his mom. So raised by a single mom, just him and the mom. So, and shows you this is where I came from, that kind of adversity. And fast forward, I'm 39 years young, this is where I am. And the guy had everything anybody would ever envision. Had private jets, had businesses running, traveled the world, all kind of exotic cars. And he's saying, I'm not showing you this to impress you, but to impress upon you what you should be thinking. If I can do it, you can do it too. I think I was stuck there and I was like, show me how. And he was like, I'm willing to show you. So he wasn't speaking to me. It was just a clip that I saw. So I hung on to this guy, and I would later understand that to create anything in life, it's basically understanding that yes, there's a skill set to be achieved, there's a mindset to be put in place, and then understand your own personal philosophy and perspective of how the marketplace works. So spend around 3 years with this guy trying to be taught and reprogram your mind in regards to understanding how finances and the marketplace works. So he said luck will play a major role in everybody's life, and at one point or the other people will be lucky, but the true definition of luck is when preparation meets opportunity. So because I was mentally prepared and I had been coached for the last, like I had done already 3 years of personal development and that mind coaching, then I was able to recognize a trend in 2017. So by then, I think I'd already seen Bitcoin way back in 2014. And now in 2014, there was only one crypto. There was only Bitcoin, and then Ethereum came in 2014. Right now, there are hundreds of thousands of cryptos, back then there were only a couple of them. So by the time we get to 2017, I'd already interacted with that space for a couple of years. And then something happened. We happened to be in the season where cryptos were just working in 2017. So in 2017, anybody who bought, it wasn't genius. If you bought any currency, Bitcoin, Ethereum, Tron, Monero, Zcash, Litecoin, Cardano, you just made money. So you could sleep and wake up a dollar millionaire. So we made crazy amounts of money in 2017. And it kind of opened up my eyes to the possibilities of what the space looks like. And from that day onwards, I would later now in 2018 diversify into real estate and so many other things. But over the years, we realized a trend because the market cycle for crypto happens every 4 years. So apparently, out of all those cryptos, if you go check online, Bitcoin dominates the market by over 50%. So what happens is Bitcoin, because it dominates the market by this much, then it becomes like the base value for understanding how the market behaves. There's so many other things, market sentiments and all that, but Bitcoin by itself, what happens is now that it dominates the market by over 50%, and we're talking about a market of over $1.6 trillion, it's a huge market. So if that one currency would dominate the economy by that much, then what you need to do is study this currency. For Bitcoin, how much is produced in the market, the supply reduces by half every 4 years. So reduced in 2016, 2012, 2016, 2020, 2024. So the year after halving is usually a bull year, is where we climax the market. So 2017, we saw Bitcoin rise from, I think February of 2017, we were at $900. 2017 December, we clocked $20,000. It's like almost 10, 20 times. There is no asset class that in the market that can do that much. Now there are currencies that did 100 times, 1,000 times. Now that was 2017. Then later we would experience a recession and then consolidation, and then again halving happens in 2020. In 2021, in the middle of COVID, for those who failed to understand what 2017 looked like, 2021 again, exponential growth. For people who kept crypto asset portfolios of currencies like Dogecoin and Shiba Inu and Solana, currencies like that, we made crazy amounts of money again. 2021. Now again, this year April, Bitcoin is halving, and then we are now in that process where we are beginning an organic bull run into the climax that comes sometimes next year. Again, we are in season, but at that time again, we're going to experience another set of dollar billionaires and millionaires out there in the marketplace. So if anybody has this information and they can be able to be in spaces where these conversations are held, then it becomes very easy for you to tap into that global space and remotely take advantage from the comfort of your own home with internet, be able to participate in the biggest global market, I think, without having any professional or any, what do you call it, in the stock market you usually need brokers and that domain to access the market. Now this is an open market that anybody can just jump in, and so that's why it's very exciting, because we leverage on people's emotional in what is it, incompetence or what, that name. So people will be philanthropic, people will have those mood swings, energy swings. So for the next 1 year, we're in a very exciting time. We just observe the market, and you see people coming into the space with zero knowledge, zero understanding, and you're gonna make crazy amounts of money again.
As you've heard, dear viewers, it's never too late to invest. So start now. My name is Natasha Vairemo.